Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I think I have to start with an apology. It's because I was looking at the USE Minis yesterday in our training webinar, but I was actually focusing a lot in our training on the DAX. So I didn't actually look at the YM during our webinar yesterday, and I should have done because there was a potentially excellent setup unfolding right as our webinar was ending that I'd like to have a look at today. One thing we did talk about in our webinar yesterday is if I go to the ES, on the ES, I'll just clear my analysis off, on the ES we were actually looking at, if I go to the 15-minute chart, we're actually looking at that being 15-minute resistance, and as you can see that held the high of the day very nicely there. In fact, because we had just a sharp up day the day before, we were actually anticipating a choppy sideways day, so what unfolded was actually a bit of a surprise to us as well. But the point being that ES was at 15-minute resistance as we were looking in our webinar yesterday. But I want to focus on the YM because the YM was at an even better position. So if I go to the YM, here's the 15-minute chart. Now what I liked about this was this move up here. This move up here was actually a 5-wave sequence. If we hover over the high of the day there, you can see we right mouse click, Elliott wave intermediate. So during the day there's the open of yesterday. During the day you would have seen that this would have actually been a 5-wave sequence. We were actually about a tick short or shy of the minimum wave 5 WPT, so we're pretty much right at an area where we're anticipating this this rally to end. It also started at a good place here because if I right mouse click here, you can see there was actually an ABC correction nicely there which started the sequence, so this was a good sequence. As we teach in our training webinars, once a wave 5 high is complete, we then anticipate a move into the DP from the prior wave 4. So if we go back to the prior wave 4, which was here, we right mouse click, we place a decision point on the chart, and that's where we would anticipate the market to go to. And as you can see, that's exactly what happened. It did take quite a decline to get there, but that was what happened yesterday. So the point being is, could you have got any trades on that on the shorter term chart? Remember the way we approach more advanced MTPredictor analysis, and this was covered in detail in my last video, which actually was on the DAX, but the same principle applies, is that here we have on our higher time frame chart, in this case it was a 15-minute chart, we were at a wave 5 high coming in at the high of the day yesterday, and it was pretty much at our WPT area where we're anticipating, so it's the minimum wave 5 WPT there, pretty much at an area where we're anticipating a high to come in. Actually, if we go back and we take, I think it was a DP of this prior swing here, I think it was, if I drag that across, was that the one? No, it's actually one just below that. So if I go back to this pivot, take a DP off here, drag that across, this was actually at the high as well, so I'll just reset the scale there. You can see that that was actually at decision point resistance as well. So the idea being is that on the higher time frame chart you were actually at resistance and you were also at a wave 5 high. So let's go down to the 3-minute chart and see what unfolded. On the 3-minute chart you can see, well, I'll just get rid of that DP, actually I'll drag it across a bit out of the way. As you can see on the 3-minute chart we actually had a DP sell come in here. Obviously this is against our blue STF, but for the more experienced users we look at the support and resistance at the higher time frame rather than using this STF colour. So this DP sell would have been a good one to take. So let's right mouse click, place the analysis on the chart. You can see that it came down to the first target very nicely indeed. When this happens we look at our STF, and in this case our STF is what we call strong because it's beyond our strength band. Therefore we use our ATR stop, which is our red and blue dots, red dots because we're going down, to manage the trade. So that would have held you short all the way down to just about there. And as you can see that actually coincided quite nicely with the higher time frame support as well. But the beauty of this was, look at the profit. The profit here was 12 times the initial risk. In other words, this trade here with our position sizing on a sample $20,000 account would have gone short 8 contracts. That keeps our initial risk small and under control at less than 2% of our sample account, which means that our profit would have been 12 times greater than the initial risk. And actually that would have been short from the very high of the day. We're also looking at a trade on the ES yesterday as well. We're actually looking at this DP sell here, And what I was suggesting was, because there was only 15-minute DP support resistance, if you had been worried about this, you could have brought your stop to break even, and that would have been a break even trade. Or even if you had done a -1 hour loss, that would have been kept small and under control. You would have had a second attempt at going short if you wanted to at here, which would have actually been a -1 hour loss. Then the next trade again came in at a third attempt here, but as you can see, that one nailed the high of the day down to the first target. STF was actually strong beyond its grey band, so there's the trail into the ATR stop for a nice 5.3 hour profit. But for me, the better trade was on the YM because of the 15-minute chart position. Because if I look at the ES was just at DP resistance, and this wasn't what I call a major DP resistance, as I talked about in yesterday's webinar, was only a minor DP resistance because of the swing it came off in the prior decline. I won't go into detail on that here, that was covered in our training webinars. So for me, the better pattern was actually on the YM, mainly because not only were we at DP resistance, but also this 5-wave pattern. This 5-wave pattern here to me was actually lovely, particularly when we know that the tendency after a 5-wave sequence is complete, the tendency is to then move into the DP from the prior wave 4. So that set up the move very nicely. So that's why I started with an apology in this webinar, because I didn't look at the YM yesterday in my in our training webinars, because I basically ran out of time. I was looking at the ES and the DAX. If I had looked at the YM, I'd have been able to highlight this particular trade for you. But that's why I wanted to cover it today as a great example of how to use the multi-time frame analysis. In other words, we start with the higher time frame chart. In this example, the 15-minute. We identify a potential reversal area on the 15-minute chart and an area of where the market's likely to go to. We then go down to the shorter time frame chart, in this example the 3-minute, to then see whether there are any automatic setups on the shorter time frame. And as you can see, there's our DP sell that caught the very bar of the high of the day. Standard trade management guidelines would have come down into here using the ATR stop for a profit of 12.5 times or 12.3 times initial risk, turning an initial risk of approximately $400 into just over 4,900. So a very, very good trade, particularly when you're short from the very high of the day. So hopefully this has been a good example yet again of how to use multi-time frame analysis in MTPredictor, and showed how we could have caught that nice decline in the YM yesterday.